Auto insurance in the United States can feel confusing, but it doesn't have to be. At its core, auto insurance is a contract between you and an insurance company. You pay a monthly or annual fee called a premium, and in return, the company agrees to cover certain costs if something happens to your car or you cause damage to someone else. This system exists to protect drivers from financial loss due to accidents, theft, or other unexpected events. There are several main types of coverage. The first is liability insurance. This is usually required by law. Liability covers damage you cause to other people's property or injuries you cause to other drivers, passengers, or pedestrians. It does not cover your own car or your own medical expenses. Collision coverage, on the other hand, pays for damage to your car if you are in an accident, regardless of who is at fault. Comprehensive coverage protects against non-collision events like theft, vandalism, fire, natural disasters, or hitting an animal. Insurance companies calculate your premium based on risk factors. These include your age, driving history, the type of car you drive, where you live, and even your credit score in some states. Young drivers with sports cars and tickets will pay more because statistically, they are more likely to be in accidents. Older drivers with safe cars and clean records usually pay less. Each insurer has its own formula for determining risk and setting premiums. When you have an accident or other covered event, you file a claim. The insurance company investigates and then pays for repairs or medical bills, minus your deductible. The deductible is the amount you agree to pay yourself before the insurance coverage kicks in. Choosing a higher deductible lowers your premium but increases your out-of-pocket risk if something happens. Policies may also include optional add-ons such as roadside assistance, rental car reimbursement, and gap coverage. These increase protection but usually raise your premium. Each driver needs to decide which add-ons are worth paying for based on their own car, driving habits, and risk tolerance. Liability coverage protects others from your mistakes, collision coverage protects your own car, and comprehensive coverage protects against events outside your control. Combining these coverages depends on how much protection you want and how valuable your car is. High-value cars often need full coverage, while older cars may only need liability. Insurance exists to spread risk. By pooling premiums from many drivers, insurance companies can pay for the accidents that occur to a few. This system prevents a single accident from causing financial ruin. Insurance also ensures legal compliance because driving without at least liability coverage is illegal in almost every state. Consequences include fines, license suspension, and potential lawsuits. Understanding insurance terms helps you make better decisions. Premium is what you pay, coverage is what you get, and deductible is what you pay first in a claim. Shopping around and comparing quotes is important because different insurers weigh risk differently. Two people with similar profiles may pay very different premiums. Auto insurance is ultimately about managing uncertainty. Accidents, theft, weather events, and other damages are unpredictable. Insurance shifts that risk from you to a company in exchange for a predictable cost. The goal is to choose coverage that balances cost with protection, giving peace of mind while staying within legal requirements. By knowing your coverage, comparing quotes, understanding deductibles, and considering optional protections, you can make insurance work for you instead of against you. It's not complicated, it's financial protection designed to keep you safe on the road. With the right plan, you are prepared for the unexpected and can drive with confidence, knowing that an accident won't devastate your finances.